In 2016, BuzzFeed was valued at $1.7 billion, more than a unicorn. It was a media empire that was supposed to eat the internet. They had the quizzes, the viral listening, the Pulitzer Prize winning newsroom. They were the future of journalism. Today, their stock trades for less than $1. They missed a $5 million debt payment. Their Pulitzer-winning news division is dead. And the same founder who once said the baton has been passed to social media is now watching his company teeter on the edge of bankruptcy. This is a story of how the digital media dream died and why nobody saw it coming. The empire that ate the internet and then choked on it. There was a moment around 2016 when BuzzFeed wasn't just a website. It was a movement. If you were young, online, and remotely interested in what the internet could become, BuzzFeed was the proof. The proof that you didn't need a printing press or a broadcast tower to reach millions. The proof that a goofy quiz about which pizza topping matched your personality could sit right next to a Pulitzer Prize winning investigation about China's mass detention camps. The proof that the old media guard, the newspapers, the TV networks, the gatekeepers was finished and a new generation was taking over. Jonah Peretti, the founder, had the kind of origin story that Silicon Valley loves. He'd gone viral in the early 2000s by emailing Nike and asking them to customize sneakers with the word sweatshop on them. When Nike refused, he forwarded the exchange to friends, and it exploded across the internet. That instinct, understanding what makes people click, share, and feel something, became the DNA of BuzzFeed. By 2016, the company had raised hundreds of millions in venture capital, including a $200 million investment from Comcast NBCUniversal that valued BuzzFeed at $1.7 billion. Peretti was on magazine covers. His company was opening offices around the world. They were hiring journalists who'd left legacy newspapers, building a newsroom that would win a Pulitzer in 2021 for exposing China's Uyghur detention camps. They bought HuffPost. They bought Complex Networks for $300 million. They were going to be the first truly great digital media empire. And then, slowly at first, and then all at once, the floor fell out. The first real crack came in 2021, when BuzzFeed went public through a SPAC merger, one of those special-purpose acquisition companies that were all the rage during the pandemic-era market frenzy. It was supposed to be a triumph. The first publicly traded digital media company. They called themselves. The stock opened around $10. Within a year, it had fallen 83%. By mid-2022, it was trading at $1.68. By 2024, it was a penny stock, and the company had to execute a reverse stock split just to avoid being delisted from NASDAQ entirely. The stock that was supposed to make employees rich, the stock that some had planned to use for their children's college funds, became essentially worthless. Some former employees even sued, alleging they were blocked from selling their shares while the price cratered, watching helplessly as their financial futures evaporated in real time. But the stock crash was just a symptom. The disease ran deeper. BuzzFeed had built its entire business model on a bet that now looks almost naive. That social media platforms, Facebook primarily, would continue to send rivers of free traffic to publishers. And for a while, they did. BuzzFeed mastered the art of the viral headline, the shareable image, the content that felt native to your feed. They understood the algorithm better than almost anyone, but algorithms change. Facebook decided it didn't want to be a news distributor anymore. It wanted to be a video platform, then a metaverse company, then an AI company. With every pivot, the traffic spigot tightened. BuzzFeed's content was still good, sometimes great, but it was no longer distributed. The audience they'd built wasn't really theirs. It belonged to the platforms, and the platforms had moved on. Peretti admitted as much in a painful 2023 memo, announcing the shutdown of BuzzFeed News and 15% layoffs across the company. I made the decision to overinvest in BuzzFeed News because I love their work and mission so much, he wrote. This made me slow to accept that the big platforms wouldn't provide the distribution or financial support required to support premium, free journalism purpose-built for social media. It was a stunning confession from a man who'd built an empire on exactly that premise. The Pulitzer Prize-winning newsroom, the one that had exposed mass detention camps, that had done real, world-changing journalism, was shuttered. not because the journalism failed, but because the business model underneath it had collapsed. But Peretti wasn't done pivoting. In early 2023, he made another big bet: artificial intelligence. He promised that AI would replace the majority of static content and supercharge BuzzFeed's signature quizzes. The stock briefly surged from $3 to $15 on the news. Investors loved it. The future was AI, after all, except the AI-generated content was, by most accounts, sloppy and repetitive. Readers didn't engage. Advertisers didn't care. The stock crashed back down, and by 2025, net losses had widened by 69% to $57.7 million. The AI pivot hadn't saved BuzzFeed. It had just burned more cash and more credibility to stay alive. The company started selling its own organs. In 2024, they sold First We Feast, the brand behind a massively popular Hot Ones show, for $82.5 million. They sold Complex Networks for $108.6 million, a third of what they paid for it just 3 years earlier. They laid off staff again and again. They issued a going concern warning, the corporate equivalent of a hospital calling the family, to say they don't know if the patient will make it through the night. By early 2026, BuzzFeed had missed a $5 million debt payment and received an extension until May 18th to avoid default. The company warned it could run out of money before the end of the year. A decade after being valued at $1.7 billion, its market cap had shriveled to roughly $28 million. It's tempting to see BuzzFeed's collapse as a singular failure. One bad CO, one bad bet, one unlucky moment. But the truth is darker and more instructive. BuzzFeed wasn't an outlier. It was a canary in the coal mine. Vice Media filed for bankruptcy. Gawker shut down under lawsuits. Vox Media explored selling itself in pieces. The entire digital media model that venture capital poured billions into during the 2010s, scale fast, monetize attention, dominate social distribution, turned out to be built on sand. The platforms that publishers thought they were partnering with were actually landlords, and the rent kept going up while the traffic kept going down. Ben Smith, the former BuzzFeed news editor who left to write a media column for the New York Times, put perfectly, the company's struggles are an overhang of a whole era where investors imagined a media cost structure that never materialized. They thought you could build a newsroom the way you build a tech startup, with venture capital, with growth at all costs, with a promise that scale would eventually turn into profit. But journalism doesn't scale like software. 1,000 viral listicles don't pay for one investigative reporter the way 1,000 users pay for one engineer. The math was always wrong. It just took a decade for the bill to come due. And yet, even now, with the company on life support, Peretti remains defiant. He's hinted at new AI apps for 2026. He claims the sum of the parts is worth more than the whole. He still believes, or at least says he believes, that BuzzFeed can find a way through. But with only $8.5 million in cash remaining and a debt payment deadline looming, the clock is ticking loudly. There's a cruel irony in all of this. BuzzFeed, more than any other company, understood the internet. They understood what makes people share, what makes content spread, what makes a brand feel like it belongs to its audience rather than talking down to it. They were the internet's native children, and the internet, in the end, ate them alive. The same platforms that built them starved them. The same audience that loved them forgot them. The same investors who celebrated them abandoned them. The story of BuzzFeed isn't just a story of one company's fall. It's the story of an entire generation's media dream. The dream that the internet would democratize information, that virality could sustain journalism, that attention business model. That dream is now in ruins. And the ruins are still smoldering as of the next time you see a "which character are you?" quiz or a listicle about things only 90s kids remember. Remember what it cost to put them there. Remember the Pulitzer winning reporters who lost their jobs. Remember the employees who watched their stock options turn to dust. Remember the $1.7 billion empire that now trades for pennies. And remember that in the digital economy, the only thing more dangerous than being ignored is being dependent on someone else's platform. Because platforms change, algorithms change, and when they do, the empires built on them don't just decline. They vanish.